Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the pump and dump on Bitcoin and many of these crypto assets, as well as the continuous falling on the stock market, which all goes along with the hypothesis that we had that, of course, Bitcoin was in a stronger position than the stock market, as I mentioned yesterday, that it was likely to have some continued a contraction on the Bitcoin volatility, and that the stock market looked pretty weak, suggesting that stocks might have dumped and Bitcoin more or less would have just continued to compress into its wedge and go sideways with a little bit of a waver here and there. So if we do jump over to stocks, we can probably see that we just had a ton of red on the board today. And what did I mention? Right, like Apple was looking pretty likely to take a tumble, and as Apple fell, so did the Nasdaq, finally putting in that lower low that we were looking for, having suggested that since the S&P made a lower low, and many of the different indices had made a lower low compared to the June low, that most likely the NAS 100 and the Nasdaq would follow along with that. Although it was putting in a little bit of a double bottom, when you have a behemoth like Apple taking a tumble, there's just no way that the Nasdaq was going to hold that footing, and so that's why I did lean bearish on the stock market, and it turned out that was a pretty wise call. Overall, globally, you can see markets are a bit more mixed, with some of these emerging markets being the winners today. Of course, the United Kingdom does seem to have a little bit of a spotty bounce in some corners, but we are just seeing in the first world countries a general decline. Guys, let's go ahead and take a look at our economic calendar because, of course, the big news of the day was that PCE data, and we did expect that it would be perhaps nominally changing, but probably because of housing largely, and because of just the increase in rents. Inflation, especially the core PCE inflation, did rise more than expected. And this isn't good, guys. This is going to create a situation where the Federal Reserve is going to be quite concerned about these numbers. I mean, the last reading was 4.6 on year over year. Now we're getting 4.9. And that's not good, guys. We did get the last reading on the PCE was a 0% increase, and now we're getting greater than half a percent increase, and that's definitely not good month over month. Last month we had negative 0.1% on the overall PCE, not just the core, but on the overall PCE, inflation did drop by 0.1%. But here you see that it actually increased 0.3%. And so this should be shocking to the market, and markets should be tumbling. So it is quite remarkable that Bitcoin was in that squeeze play formation, that it was holding those key levels that I mentioned it would need to hold. And if we go over to the Bitcoin chart, we can see that while stocks tumbled, we didn't get much movement on Bitcoin, despite our macro downtrend that we had here. What we did get, however, is the quite expected and what I was preparing for you for smackdown on the chart, where we did have that massive spike up, sort of like the one that the Alpha Fam caught the other day, and that was a very tradable move for us that had a formation that went along with it, a setup and conditions, and validations, right, and confirmations that went with it so that we could take that trade as well as an implied target. What we saw here was just a general squeeze play, which we could just suggest might be limited by the top of the downtrend. And so the conditions were much more chaotic, much less under control. Now, if you're someone who's experienced with EMAs, then you probably could have played this move relatively well and come out, maybe break even at worst, or maybe you even just captured the move and sold at resistance, like I was suggesting, right? This resistance is no joke, and so we have been just rejected, 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 right? Rejected, 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 and now, of course, again, once again, rejected, right? Like hard rejected. This line is just spraying the mace in our eyes. It wants nothing to do with us, and yet we keep trying. And so I don't know, guys. I think the next step is a restraining order. But with the stock market headed down, with all the chaos in the markets, with we might be seeing some type of devaluation of stocks based upon the price over earnings ratio, depending on what the earnings reports are for the third quarter, which should be released soon. So, guys, we're gonna find out. If Bitcoin is going to get stressed with the rest of the markets and lean to the downside, or if we're going to just break with the stock market, break our downtrend, and be seen as the safe haven in a sea of weak currencies. And so, if Bitcoin does break this downtrend, it will be quite an interesting thing. And guys, I just wanted to point out that if we go to log scale, that we can see that we do have this downtrend on the logarithmic, right? This kind of parabolic price action, which is now parabolic to the downside. So I think we can start considering this, that there could be a play all the way up to our CME gap, just based upon the logarithmic. Now, typically, I don't like to be on the logarithmic chart unless there is a good reason to be there. And so far, we've had a pretty linear progression to the downside. So I've just been on the linear charts more or less. But seeing that we didn't get a macro mean reversion yet, and these little baby moves don't really count compared to how much we have fallen, I would consider that perhaps on the perhaps on the macro, that this downtrend is now replacing our our linear macro downtrend, and that we should be jumping to perhaps, and this is just a hypothesis, guys, this isn't validated yet, that perhaps we should be jumping to a macro logarithmic downtrend. Now, this is debatable, and there's different virtues of looking at the chart in these two different ways, right? Look at this white line versus this yellow line on the logarithmic, which is what we're at right now. You can see that our trend line, like we have lots of room to play on this type of expansion all the way in this area. Whereas on the linear chart, if you look at the yellow line, right, we are basically butting heads with it and easily can get rejected yet again. But if we are entering the possibility of a bottoming process, or if price action is just really going parabolic to the downside, a lot of these bots, a lot of these algorithms, a lot of traders, now that we've gotten into like a year-long downtrend, they might be switching over to the logarithmic chart, and that might be giving us just a little bit more room to play. And so I'm going to jump between these charts from now on, just to give us the double perspective. However, for the time being, And unless we break through the linear downtrend, I am going to stick with the linear chart because that has been the most reliable so far. And also, as we haven't gone parabolic in our current area, the linear chart makes the most sense for capturing the current price action and measuring the current moves. The logarithmic chart does distort price action and lines quite a bit, so I prefer to stay off the logarithmic as much as possible. Guys, I do have new updated, key levels to watch for Bitcoin. So just if you want for a daily continuation, then we are going to be looking at this type of area at 19,140. As long as we can hold above that area, 19,170-ish, right? That kind of area. Then, and again, these are zones, guys, right? With, all these levels that I mark out, the lower we go on them, the more risk there is to the downside. The higher we go, the more likely it is that we're going to keep our footing and perhaps even break out of this downtrend. And so, just to survive another day, I really would suggest that we want to be above 19,700, and that as long as we're above 19,000, that let's just call it 19,150, that we're pretty solid footed. But guys, if we do break below 18,800, and definitely if we break below 18,600, we're going to lose all of our momentum, not only for the daily, but also for the 2 day. So that's something that we don't want to be losing there. And let's just bring this to the front. So this white box represents just a minimum range for the 2 day and for the 5 day. This blue box represents my daily kind of key area. We hold this blue box and we're pretty good for the daily. We hold this white box and we're probably okay for about 2 to 5 days. But you don't get on top of that white box and it starts getting a little bit questionable. You can see that we're ahead of the blue box, but we're under the top of the white box. And so it looks like we're going to hold on for one more day. The day already closed a little while ago. So we're going to have to measure this tomorrow. But for the next 24 hours, you can pretty much be looking at that zone between 19,150 and 19,450 to hang on. If we lose that, of course, it's just more likely that we go to the downside. Macro, we are not bullish by any account, so we are totally just looking kind of bad on the macro. And then if we go to the monthly, because we did have a new monthly closing, let me turn off my drawings. You can see that this is very sloppy. Um, However, a couple months in a row down, maybe we could October could be a good day, and maybe this could end up being putting in a little bit of an S curve here. So we are going to be open-minded to perhaps a bullish October, although this pattern is not looking good. If we do throw on those EMAs, you can see that on the monthly we're well under the 9 and we're being suppressed by the 4 EMA. So our first goal is just to get up to 21,150, okay, on the monthly in October. Can we do that at least? And then going from there, we'd really love to check to the 9 as soon as possible, which is going to be in that 26 to $28,000 range, where we do have those CME gaps just overhead. And so if we can get there, I'm going to be much more relieved for this chart overall. But until then, I can only say one thing. This thing looks bearish, and as long as we're under the 4 EMA on any time frame, we're looking pretty bearish. A 3-month, a quarterly also closed, and we are even more ugly on the 3-month quarterly, if you can believe it. So just to be careful, Alpha Fam, there could be another step down still. We do have a little bit of a naked candle here on the quarterly. So if there is a quarterly backfill to that 12,000, I mean, this kind of makes sense to finish filling out this candle if the market does decide to tumble. and we can play it from ear as the month progresses. But again, this doesn't have to happen right away. There could be an October pump and then a dump in November, right? You understand? So, checking back to the 4 would make perfect sense on the quarterly inside of the winter quarter. And then maybe it's Q1 2023 that dumps us down, right? So, guys, we're just going to be paying attention to this stuff, and the key thing that we should be on alert for this week, if we do go over to our indicators, is this volatility on the daily. And you can't see it right now, but this has been just flashing off and on an extreme, and the chart just is being very indecisive about this volatility. But this volatility has pinched down to an extreme several times today, and so it is threatening to basically be at minimum volatility, sort of like over here, and it's been firing off this signal and then taking it back, firing it off and then taking it back. And so as this volatility continues to compress and contract to the downside here, we're just going to be at more risk for a big move again. And I said in the last couple of videos that it could take a few days, right? I mean, this is the daily, but it could take a week for this to play out, right? And so we are going to wait for this thing to pinch, and then probably, we're just going to have sideways action until that's very clearly pinched off, and then we're going to see if we either majorly dump or if we can majorly pump. And you can see the setup on this squeeze play that we have here. This is actually a very interesting squeeze play. We are, leaning towards the 4 EMA and the 9 EMA, which is in actually a bearish posture. So if we do get below the 4, this thing could easily squeeze to the downside. However, we are between the 9 and the 21 EMA, and if we do get closer to that 21, this thing could squeeze to the upside. So if you just want a simple EMAs kind of perspective, the closer we are to a 19,600, the more likely that volatility is to just sproing us up to the top side, and the closer that we are to being under this 4 EMA, that pink line, right, then the more likely we are to just sproing to the downside, and again, that volatility on the daily is just maxing out here. So well, it's contracting to a max, and that usually leads to an explosive move. Okay, guys. So let's go ahead and go over to CME to see what a futures is looking like. And here you can see on the CME chart exactly what I've been seeing just pop up and on and off on the daily on the 24/7 exchanges, just this maximum low volatility. And of course, the professional charts are saying that they are ready to go. They are ready to have that explosive move, and it's just the 24/7 exchange which isn't quite ready yet, and I'm not sure what that difference is about, but you can see the exact same setup. So CME and the professional exchange and the 24/7 exchanges have synced up into how they are going to play this move, and it looks um, it's just we're so close to either way. Underneath that 4 gonna look pretty bad. Above the 9, and we have some hopium. Guys, for our levels for CME, very similar. Very similar to the 24/7 exchange. Basically, we want to definitely be sure to hold that $19,000 area. Going to look much better above 19,000. Let's call it 400. Let's go ahead and just check out what the 2-day and the 5-day need as minimums. Pretty much the minimum is going to be that 19,000 also, but then the 2 and the 5-day would like 19,530. So let's just call that 19,550. You start seeing, a 2-day or a 5-day closure above 19,550, and that's probably a front runnable signal on some of these macro movements. But otherwise, just for the daily, so that we can survive yet another day, pretty assured if we get above 19,400. And there's definitely a chance as long as we can hold that 19,000 area. Starting to lose under 19,000, it just statistically it's less likely that we're going to hold on to our level, and that volatility may pop us to the downside. And then if we lose 18,600, it's going to look pretty bad. Guys, let's go ahead and pop over to Ethereum. Ethereum, pretty similar setup as Bitcoin, just under the 4 on the daily. Okay, so that's just a much worse look. It is much more likely to squeeze to the downside. If we look at ETH's volatility, we have the same kind of setup here that Bitcoin and Bitcoin CME is having, which is that volatility just getting maxed out to the contracted side, indicating that it would like to explode next, either to the upside or the downside. And so this bearish posture of ETH is not good for it, right? And it also could suggest something about the direction of Bitcoin, that perhaps ETH is giving away a little bit of a clue to the downside here. But for the daily, it is actually holding the level that it needs to hold. So we would want to see ETH again, that level of 1330 just sitting there. So that's a pretty solid area for us to close. If we can close by tomorrow above 1330, then ETH lives on another day. Getting kind of weaker under 1325, and we're really going to lose the whole enchilada below 1250. You lose 1250 and it's just sayonara, sucker. Okay, and that includes the 2-day. For the 2-day and a 5-day, the region that they would like to capture is a little bit higher, of course, than the daily. It just sets a little bit higher standard. That's why I offer the 2-day and the 5-day. So yes, the minimum is 1330, but then you really want to be sitting above, let's call it 1340. You get above 1340, and that's pretty much a front runnable signal on the 2-day that we could perhaps try to come up to this 1400 level. But we're not there yet, and so these are just numbers that I'm giving you for the key levels for Ethereum. Jumping over to Ethereum, CME, the professional exchange, pretty much the same setup, guys. So Bitcoin and ETH syncing up pretty well here. ETH does look much uglier on its CME chart than actually, because the 9 is way overhead, and so that's interesting. But yeah, ETH on CME just still being very indecisive and looking very ugly here, I'm sorry to say. So um, I'm trying to have this white box ahead of the blue box, because the blue box is the daily, and that's the 2-day and the 5-day. But basically, these two boxes are in the same region, so we would want to hold on to 1330 on the CME chart, and to be not uber bullish, but moderately bullish for the mid time frames. Then 1340 is what we want to hold above, and we are going to lose it all below 1280-ish. Okay, and let's see, for any type of longer term, we want to get over that 1400 zone. Guys, let's jump over to stocks, and on stocks we can see that we do have a setup that looks more similar to Ethereum than Bitcoin, to be honest. And so for the S&P 500 here, we are going to just we're basically coming in contact with this green box that I have marked out. So there is the potential for a bounce here. And guys, that could end up bouncing us all the way up to these levels up here, perhaps 3,800 to get a retest on that. And this is what I'll be looking for. Since we did a breakdown on Nasdaq, I do think that frees up the S&P 500 to start to have a little bit of a bounce. I think the S&P 500 was waiting for Nasdaq to put in that lower low. So here's the June low on the S&P, and it already had a lower low, but the Nasdaq hadn't yet. So I think the S&P has been waiting for the Nasdaq to kind of catch up. There's a few more high cap stocks that need to collapse. And so if there is going to be a bounce, and by the way, guys, I'm not saying that there will be a bounce. I'm saying because we could have a capitulation moment, with these guys like Coca-Cola and Apple and just all these high cap stocks just starting to tumble in a very real and scary way. This thing doesn't have to bounce. Like we could be entering a major capitulation moment. But if you just want to go by the technicals, this would be a good place to attempt to bounce now that CME doesn't have that divergence with the S&P. Now that they're more in sync, the markets can move together. And so what I would want to see us minimally capturing is 3660 on the S&P 500 mini futures ES1. And then if you really want to, have a conservative play, then 3730. And right now I'm pretty much targeting 3800 as just a retest if we do get that bounce. If we don't get that bounce, then perhaps we come down to this green zone that I marked out, especially if we start having earnings problems with a lot of these companies. So guys, those levels are pretty clear to me. 3650, we really need to get ahead of that, and just more conservatively 3730-ish, right? Let's see here. Let's go over to Nasdaq. For Nasdaq, we are going to see that you do see that finally we have that lower low from the June lows. And so, I do have a little area right here already marked out. That's been marked out for weeks and weeks, guys. And so I still suggest we might be able to get a little bit of bounce there. And it is interesting how it's being timed with this lower low. And so, if we get that bounce, then I would, like to see us bounce off of, you know, 10,900-ish. If we can hold that area, and then we can recapture some of this momentum at 11. Let's call it 230, 11,230. Then I'm going to be feeling a little bit better about the Nasdaq. And if you want to just have that medium time frame, that bullishness, then 11,560 is the key level to watch. However, I do suspect that we are going to get rejected around this area of 11,350 and perhaps even continue to break down. So this is just my theory of the market. You don't have to pay any attention to these green and red boxes. The momentum levels are really the things that I trade off of here. The red and green boxes are just my kind of hypothesis of how I think it might move, but that's just a guess, right? That's just an educated guess, and I could be wrong because I could be missing some factors. Now, what are some factors in the market that I could be missing? Well, let's go ahead and jump over to the dollar because it's funny. I said I didn't think I wasn't sure if I needed this dashed line here, and I was considering to delete it a couple episodes ago when I was having some frustration with my lines, and TradingView was acting weird. But look, I kept that dashed line there, and look where we're finding support, right on that dashed line. So guys, that did end up being important after all. And we didn't just get the just a massive slam breakdown in the dollar that many people thought we would. We were, in fact, contending with this 9 EMA on the daily on the dollar, and there still is the possibility of that major U-turn, which the dollar likes to do as it touches the 9. It could just cycle back to the upside. So we are going to try to pay attention to this. Now, guys, there is a rumor that China and some of these other countries could start to accelerate dumping dollars as they try to buy back their own currencies, which have been so weak and underperforming. Sort of like it's kind of like a socialist action, right? Like an intervention into the market by these big governments where they use their foreign reserves, their dollars, to buy their own currency, and then that could flush some dollars into the market, just easing up the dollar just a little bit. But guys, what's going to happen is that that's going to trigger a currency war. And so if we get into a currency war, it's not going to be good because Federal Reserves, we're basically in a reverse currency war. And so Federal Reserves are going to be competing to increase interest rates. And as they compete to increase interest rates, that's going to put pressure on the downside, to the downside on the stock market for those price over earnings ratios. And so we're now at that stagflation point where um, if the dollar rises, right? If the dollar rises, then we enter into a currency war, which is going to the dollar rising already suppresses market, but then the currency war itself is going to increase the need for Federal Reserves to increase interest rates, which is also going to suppress markets. And so it starts getting into a negative feedback and it becomes a death spiral, guys. And so economies are going to crumble under that if the dollar doesn't continue to come down on its own. So, everyone should pray that the dollar comes down and starts easing up because we do not want to be in a major global reverse currency war and then also be entering into a global recession. It's just this stuff is not good, guys. Like, we still could potentially have multiple legs down in the markets, and we're just going to play the chart as it is. But I just am trying to forecast things so that you guys, so the Alpha Fam here isn't caught unawares, okay? And just trying to look after you guys. And what we don't want to see, however, is the dollar getting into this 120 area because that will definitely trigger those wars just everywhere, okay? The currency wars, rather. Guys, looking at the VIX, again, like I told you, this thing just looks bullish, and let me remove my drawings, and it's just trying to hang on for dear life above that 4 uh, EMA on the daily. And yes, we had a touchback, but this thing just wants to maintain its bullish posture, so it keeps coming above the 4 EMA. Normally, to be bullish in general, you should be above the 9 EMA, but this thing is hanging out above the 4, and it breaks down and it immediately comes back above the 4. So I'm still thinking that we're building up a volatility, and we should be aware that we could get a spike in volatility on the markets at any time, and that's just not good, and it can be hell for trading. It could also represent a capitulation moment. And since we are violating this wedge more and more to the upside, just watch this space, because if we use this downtrend as a support, then we are going to probably bounce to the 40 area, and it could get quite scary in markets. Let's go ahead and look at USDT. Again, just chopping between these two lines, my green line and my red line, just playing the good old yo-yo game in a expanding wedge here. So there's no real pressure for this to resolve. The crypto market can pretty much just yo-yo as much as it needs to until the traditional markets are ready to go, and then either the VIX and the dollar do something crazy, or price over earnings ratios are crazy, and then the USDT dominance breaks up, and then the crypto market just goes to hell. Or those things ease off, and then we break under the green line, and then people start putting their money back into crypto. But until then, this is just like a really indecision broadening wedge for us, okay? Let's go ahead and, I think we pretty much got our risk factors. We got our Bitcoin, we got our Ethereum, we got the stock market. And let's just go ahead and see if on Bitcoin, if we have any kind of interesting divergence that might be just playing on the shorter time frames right now. And not really seeing too much there, not seeing too much. How about the RSI? This is the 4-hour. How about the 1-hour? 6-hour, 8-hour, 12-hour, 16-hour, daily. All right, I'm just not seeing anything too important working here. We are just coming off of that bullish divergence on the 2-day from the MACD, and those drives that we had on the daily, which continue to push us up into that kind of squeeze play that we've been in off of the MACD. But otherwise, we're just kind of chilling out. You can kind of see this kind of indecision triangle, right? Like an uptrend, but also a downtrend. So we're just getting wedged in here. And our volatility continues to threaten to max out on the 24/7 exchange. So we will be looking for some type of explosive move relatively soon, but CME and Ethereum and they may be waiting for Bitcoin, and then Bitcoin may be waiting for more of the stock market or the dollar information, or perhaps those earnings reports now that we have a quarterly closing and the VIX is just hovering there, threatening us like a guillotine. All right, guys, that was your alpha for the day. Stay safe and happy trading.